Back with closing trades, and quite a bit of bleeding is what you're seeing at an index level, not just index level, individual portfolio level. And let me not even talk about what's happening within individual sectors, because that's going to give you a clearer picture of the kind of, clobbering that you're seeing in the markets right now. Look at the new age stocks. Look at what's happening within the realty index, cap goods, telecom, infrastructure, power, banks, technology. Pick up any sector and you're seeing very, very sharp cuts over there. But let's try and understand, how this entire jigsaw is going to play out, what Trump 2.0 is going to mean for the dollar and the world, and of course, emerging markets, much like India as well in particular. Marc Faber, editor and publisher of the Gloom, Boom and Doom report, joins in on the show right now. Marc, great to have you today on ET Now. Thank you so much for your time. Firstly, just wanting to understand what Trump 2.0 regime is going to mean for the US dollar and whether it's going to continue its upcycle.
Well, that's a very good question, because I think that the widespread optimism about the Trump second regime is misplaced. I think the dollar will weaken because he will spend as much as the previous governments. They will not cut the deficit much. Most likely, the deficit will increase under Trump. And so I think that money printing will be again accelerating, and that it will weaken the US dollar, certainly against precious metals. Yeah. And so I'm not very positive about the US, and a weak dollar would be welcome by European stock markets and by emerging markets.
Okay, by emerging markets. But when we were speaking a few months ago, Marc, you talked about how everything looks to be in a bubble. Has a lot of that corrected now, at least in the Indian markets? Because we have seen a correction of what, 10-12% from tops?
Yes, the damage caused in India is considerable, because the index is holding up reasonably well, whereas the typical stock is down 20 to 30% already. So actually the indices don't reflect the reality of the damage. The damage is much more considerable. I've seen a chart about various sectors. Many sectors are down 30%.
So after the 30% correction, Marc, is anything getting into the buy zone now? Any sector that you think in India might just look relatively attractive?
I think the problem is I see many stocks in the world that are reasonably priced, also in Latin America and in Europe. But I think once the Magnificent Seven in America start to decline, which I think is imminent, then everything will come down somewhat. So I'm kind of holding off buying much more at the present time. I would like to buy when the conditions are better. But one thing I want to point out, the US has outperformed everything over the last 10 years. And some emerging markets and Europe have been trending down or are flat. And so some markets, like the Magnificent Seven in the US, are topping out, whereas other markets are bottoming out. Also, food prices, many food prices, food commodities, wheat, corn, soybeans, are sort of bottoming out. And so I believe that money, once the Magnificent Seven and the FANG stocks in America, once they break down, the money will flow in other places. Also, once the dollar is no longer the favorite currency as it is now, the money will flow somewhere else and boost the prices of markets that have been in a downtrend for 10 years or so. So, for instance, I like Hong Kong shares and Hong Kong property stocks. I also like Chinese stocks. The Chinese stocks now are much, much cheaper than Indian stocks.
Interesting. But Mark, the chatter about the mighty IT giants in the US and, the big fall, or rather the impending fall, has been on for quite some time now. What makes you believe that, finally the Humpty Dumpty will fall?
Well, that's a very good question because you're never sure about predicting the future. I mean, I don't know any guru that predicts the future consistently, accurately. Especially foreign exchange markets are very tricky because they depend a lot on policy measures. But one thing I want to say about the Magnificent Seven in the US, they are extremely expensive, and they're expensive about relative to what you know with certainty about their future earnings. So on a PE basis, they're very expensive, and two, we don't know what the earnings of Tesla will be in 3 years' time. We don't know what the earnings of NVIDIA will be in 3 years' time or 5 years' time. So they are priced for a scenario where nothing goes wrong and everything exceeds expectations. And I don't believe that they will exceed expectations because if you look at statistics in America, investors' expectations are at the highest level ever. They've never been this optimistic about the future of stock prices. So I'm very skeptical, but I agree with you. You don't know for sure. But why take the risk about something when you don't know for sure? I'm more interested in things that are very depressed, where everybody's negative. In the Western press, you cannot find a positive article or comment about China and Hong Kong. And Hong Kong has its set of problems, but not as bad as Berlin, London, Paris, Marseille, and so forth, where the immigrants are taking over entire areas.
Is China the best tactical trade right now then?
I beg your pardon?
Is China then the best tactical trade because of the depressed valuations?
It's one option. Latin American markets are also very inexpensive. And in Latin America, last year, I was talking about Argentina for the last 3 years. Last year, it's the best performing ETF, up more than 60%. And some stocks within a year, like Banco Macro, are up 5 times. So you have to buy things that are really sold out and where nobody takes an interest. The stocks that are neglected, that is what you need to buy.
Quite interesting. Mark, let's talk about the India context because, clearly the dollar bullishness has weighed acutely heavily on our currency, and which is why you're also seeing this entire FII, FPI exodus. Along with that, of course, earnings as well have petered down, and it was a market which wasn't quite comfortable on the valuations, at least till October of last year. But where is it that you find structural stories now in India?
Well, as I said, I would wait to buy into India at the present time. I'm of the view that the global markets are not particularly attractive because we have a scenario where interest rates are likely to move up in the future because they haven't addressed in the Western world the problems of inflation. The problem of inflation arises from too much government spending, which then has to be financed by money printing, by an expansion of money in the system. And that creates inflation. And everywhere in the Western world, the debt level, the government debt level has increased as a percent of GDP, especially in the US and so forth. So in my view, the entire environment for stocks is not particularly good. Number two, I believe that commodity prices are sort of bottoming out. Maybe gold is not bottoming out here because it's relatively high, but say other commodities, food commodities, are sort of bottoming out and could increase quite a lot in 2025. So if that happens, inflation will accelerate. And by the way, I want to emphasize this to Indian viewers. The inflation rate in America, and I define inflation here as consumer price inflation, not asset inflation, but the increase in the cost of living, that is inflation. The increase in the cost of living in America is, of course, not 2.3% or 2.7%. It is much higher. It is between 7 and 10% if it's measured properly by private institutions and not by the government. The governments, all of them worldwide, have one leisure time activity, and that is to lie to the public about everything. They never tell the truth. And inflation, I guarantee you, you can ask every Indian, how much is the cost of living or your cost of living going up? You can ask any American, you can ask any European, how much is the cost of living of your family going up? It's all above 5%, not what the government is telling you.
Fair point. You do feel the pinch on an everyday basis because the cost of living seems to have gone up much higher than just around 5%. But Marc, since you are the author of the Gloom, Boom and Doom report, tell me, where is it that you're seeing a gloom? Where are you seeing the boom, and which is that doom area?
Well, the gloom and doom is, in my view, the popular American stocks where everybody's speculating at the present time. The most widely held stocks by the public in America are Tesla and Nvidia, both highly priced stocks with an uncertain future. And these stocks, people trade them from all over the world. So that is a sector I would avoid. And we have examples. 2 years ago, in 2021-22, we had the SPACs stocks, which were popular, then the meme stocks, and so forth. And all these stocks are down significantly. 4 years ago, the most popular stocks were cannabis stocks. They're all down 90%, and most of them are actually bankrupt. So stay away from very popular sectors. That's my view.
From the popular sectors, that's a view coming in, Marc. And we just have that big event lined up in India, the union budget. Are you expecting the government to come out with some big bang announcements, or do you think that, in order to put more money in hands of consumers, the cost of living topic that we just discussed, they should come out with some sort of tax rebates or subsidies?
I'm in favor of tax rebates, and I'm also in favor of reducing the government. In a perfect society, the government is maximum 15% of the economy and no more. And the government should stay out of the economy entirely, because whatever they touch, the government does worse than the private sector.
The other thing I wanted to talk about, you were touching upon commodities and you did talk about agri. What about the precious metals? Do you think gold and silver will continue to have the bull run that they have cherished for a large part from the COVID lows?
As you know, I have been optimistic, or not optimistic, I've been pessimistic about paper money for the last 40 years. And I've always told every reader of mine and viewer of interviews and so forth, if you trust central banks, then keep your money in paper money. But I will never trust the central banker, because all of them print money. And so the value of paper money is going down. It's going down in India, It's going down in America and in Europe. And the anchor, what is solid, is the price of gold. The price of gold doesn't move up, but the value of paper money goes down. So expressed in paper money, the gold price looks as if it's going up. And I would hold some gold as a reserve. I don't speculate in gold. But last year was a good year for me because the value of paper money has gone down 30% compared to gold. So to your viewers, I would advise keep your gold, but make sure that the government doesn't touch it because that is always an issue. They can also touch your big bitcoins and other cryptocurrencies, that I tell you.
Yeah, we'll have to be careful of that. But Marc, always a pleasure speaking with you. Thanks so much for joining us today.